This week, I'd like to talk about 4 points. 1, an update on global macroeconomics. 2, an update on what's happened in capital markets. 3, trying to make some sense between the relationship between those two, the fundamentals and the markets. And finally, a comment on the US economy and the election. Point 1, global macroeconomics update. It's been a mixed week for global macro. We've seen better than expected data out of the US, worse than expected data out of Europe, and as is often the case, somewhat mixed data from the UK. For us, this means there could be some potential central bank divergence of policy coming up in the weeks ahead, which could lead to more volatility in capital markets. Point 2, an update on capital markets. This week we've seen a strong bounce in capital markets. Indeed, from the lows of mid-February, many markets are up more than 10%. Just as there wasn't a specific catalyst for the sell-off in January and early February, there hasn't really been a tangible catalyst for this bounce. However, going back to my first point, the fact that fundamentals do seem to be picking up provides us with a lot of reassurance. Point 3, the relationship between markets and fundamentals. Sometimes it's difficult to reconcile the volatility of markets with the fundamentals, which don't move so much. Probably the best way to describe this relationship is to imagine an elastic band links the two of them. Fundamentals move like this, markets move like this. We felt that in mid-January and February, the markets had sold off too much and that elastic band was stretched quite tightly. We expected a bounce back in capital markets or a deterioration in the fundamentals. This week we've definitely seen confirmation that the fundamentals are in pretty good shape and therefore markets have bounced back as we had hoped and expected. Point 4, US elections. There's no getting away from the fact that the US elections will dominate headlines probably for the next 18 months. Ultimately, we think the US will make the rational choice. But more fundamentally encouraging for us has been the macro data this week. Personal consumption, expenditure, and inflation have come in ahead of expectations. And on the corporate side, manufacturing and services sentiment again have beat expectations.